Hello and welcome. I'm Charles Aite with the details. The Monetary Policy Committee of the Bank of Ghana has cut its key lending rates to commercial banks by 100 basis points to 13.5%. Now, the very first time since March last year. According to the governor of the Bank of Ghana, Dr. Ernest Addison, the move was influenced by a pickup of economic activity and recovery towards the pre-pandemic levels of COVID-19. The move is also expected to impact on the cost of lending in the next 2 months and stimulate economic growth in general. Let's take a listen to the governor.
On the domestic front, economic activities have picked up strongly, evidenced by the high-frequency economic indicators. Consumer and business confidence softened, triggered by the new revenue measures and recent instability in power supply, which coincided with the survey period. These have served to dampen sentiments, but are viewed as temporary and should improve in the near term. Private sector credit growth still remains below pre-pandemic levels, but we expect banks to respond to the observed emergence of increased demand for loans to support the expected pickup in economic activity. The banking sector remains sound and profitable, with adequate levels of capital and liquidity to withstand moderate to severe shocks. The industry has witnessed sustained growth in deposits, total assets, profits, and shareholder funds. The COVID-19 policy and regulatory response measures have somewhat helped to mute the effect of the pandemic on corporates and households and are being maintained in the near term. There are signs that the execution of the budget for the first 4 months point to some improved revenue collections and expenditure containment to ensure real realignment to the consolidation path. The fiscal data shows that fiscal revenues have significantly outpaced developments a year ago, but slightly lags behind target. The gap in revenue performance vis-à-vis the budgeted target has been somewhat compensated for by expenditure containment measures. However, in the near term, the committee noted the risks in the fiscal outlook surrounding wage settlements, energy IPP payments, the potential for arrears build-up, the potential for scaled-up expenditures associated with COVID-19 and mass vaccination efforts, and the implementation of the Ghana Cares program, which would have to be carefully managed in a time-consistent manner to minimize any deviation from the path of fiscal consolidation. On growth outlook, the committee's view was that the projected growth in the extractive industries, the steady rollout of the vaccination program and recovery in industry and the services sectors should work their way in supporting a faster closure of the output gap in the medium term. Headline inflation eased sharply to within the medium-term target band, driven mainly by lower food prices and base drift effects, a tight monetary policy stance, and stable exchange rate conditions. Since the initial shock to inflation in April 2020, the forecast showed that inflation will be close to the central target by June 2021. These forecasts remain broadly unchanged, and inflation would remain within the target band in the next quarter. Risks to the inflation outlook appear muted in the near term, but pressures from mostly rents and transport fares would require some monitoring to anchor inflation expectations. Under these circumstances, the committee decided to lower the monetary policy rate by 100 basis points to 13.5%. The committee will continue to monitor price developments closely and take appropriate action where necessary to contain all potential pressures in the inflation outlook.
And that's Dr. Ernest Addison, the governor of the Bank of Ghana. We're joined on the phone lines by assistant editor of Joy Business. He's actually joining us via our link, video link, George Rafi, with details from the MPC meeting. George, we're grateful that you joined us. First of all, what other reasons did the Bank of Ghana give on the reduction of the rate by 100 basis points?
Charles, before I go ahead to give you the other reasons, I believe that one question that a lot of businesses out there will be asking themselves is, what is the impact of this on cost of credit. Now, Charles, this is the policy rate is the rate at which the Bank of Ghana actually lends to commercial banks out there. And his expectation, or the expectation, that if this rate drops, then that could also impact on the cost of credit of these commercial banks, and they can then in turn pass it on to businesses out there. So basically, if you look at the number right now, based on the transmission mechanism, within the next 1 or 2 months, we should see cost of credit being impacted. So, Charles, if you intend to take any loan, or if you are servicing a loan, based on this decision by the Bank of Ghana, we could see some variation in that line. In terms of other reasons or what other issues that the Bank of Ghana governor spoke about, well, there was this argument, or him trying to clarify why we've seen the debt-to-GDP ratio reduce, even though the nominal numbers have gone up. And it has to do with the economy expanding. And that is why we saw that variation in the nominal numbers going up, but the debt-to-GDP ratio actually coming down slightly. On the Ghana cedi, if we should follow the numbers closely over the past 2 weeks, we have seen some blips, Charles. And the government indeed confirmed what we asked earlier on, which was in direction or in line with the fact that some of the multinationals have started paying dividend to their shareholders outside the country. And that is why we've seen that subtle pressure on the Ghana cedi. But Charles, if you could recall, or if you could look back, there was a directive from the Bank of Ghana to these commercial banks and multinationals for them to stagger these dividends. So what has happened? So the governor actually informed us that they are currently working to ensure that these multinationals abide by this directive. And he's actually going to have a meeting with these multinationals today to ensure that they actually comply by these directives, where they have to stagger these remittances because of its impact on the cost of credit and also the Ghana cedi going forward. So the governor also spoke about this as well, Charles. And also the bit about cryptocurrency. The governor maintained that their stance hasn't changed, and as we speak right now, they still stand by the argument or the projection that it is still not recognized as a legal currency, and they are not going to approve it. But Charles, this is a very historic reduction, and it might be in line to speak to a banking consultant, Notary Champon, who actually joins me here for some little understanding and also views on this. So Nanam, some may describe this as a historic cut. For you, did you expect this reduction?
No, it wasn't. Should I take it off? Yeah, it wasn't expected, but that is the beauty of finance. When the unexpected comes, then it helps the market to move. Now, this non-expectation will mean that people will now have to readjust to the good news, and so it's most welcome.
You know, there's always been a critical question about the transmission mechanism, and even the argument about how many commercial banks today are turning to the Bank of Ghana for lending, and how this cut should impact on the cost of credit. What do you make of this argument where some are even saying that, well, the policy rate is losing its relevance? First, are you hoping to see this reduction hit the market in terms of cost of credit?
It should. It's been explained over and over again by the governor that the transmission rate differs when they increase from when they reduce. If this had been an increase today, tomorrow the banks would be adopting the new increase. Now, being a reduction, they take their time. That's because some of the costs involved are fixed costs, and dealing with fixed costs is different from dealing with variable costs. And so gradually, they will reduce because the 14.5 has stayed for a long time. And from the time that it was reduced back in 2020 all the way to 2021, the interest rate has come down. That is because the reduction was reflected. So now that this 1%, we shouldn't expect an immediate or instantaneous reduction, but gradually we will get there.
No, I mean, pushing you to the wall, what timeline are you looking at, that within the next 1 month we should see the repricing taking place, or the next 2 months?
about 6 months.
That could take very long, because then someone again comes back to the argument about the relevance of this whole policy rate as well and impact on cost of credit.
Yeah. Yes, unfortunately, that's the way the market behaves. And Rome was not built in a day, so we shouldn't expect that they reduce it today and then tomorrow is transmission has happened. Let's give them a bit of time, but eventually it will happen.
The governor also, Nana, in trying to engage him, there was this challenge where how do we stimulate lending to private sector, i.e. rising NPL? If you look at the data, credit to private sector is nothing to write home about. What do you make of this challenge where the governor is saying that unless we also see a clear improvement in NPL, it might be difficult on his part to try and in a subtle way compel these commercial banks to improve lending to private sector?
I mean, the compelling can only be by moral suasion, because there's no law in a free market to say that the market is free and at the same time you set prices. It has to be allowed. So the moral suasion is where you call them and say, please help us to help the private sector. But on the other hand, as you rightly said, if the NPLs are at the level that they are now, then there's no encouragement to ask them, to stop what we call Baroda bank banking, because that's what Baroda Bank was doing. They were not lending to the private sector, all was going on treasury bills. And now all the banks, because of the risk, and this risk has not been controllable in the sense that it's come through the advent of COVID. And COVID is not within the control of any bank. And so as soon as it comes under control, the restrictions are lifted, then I'm sure the banks will follow suit and give out more loans.
The governor talked about digital currency. They are ready. Do you think that we should also tread cautiously with this, or listen, current trends on the international market warrants the regulator to move to this space?
Yeah, the digital currency, as far back as January, February, the government signed, or the bank, signed and had an understanding with a U.S. company to do what they call sandbox system. And the sandbox is where the fintech will test the system for its robustness before it comes out. And I was given a timeline of around, I think September, October, that BOG will come out with the outcome of that. And that's why the governor said it's well advanced. So I think the sandbox system is still ongoing and they will come out.
Now, finally, on the development bank, the governor gave an assurance about some tools that they will also put in place to ensure that they stick to their mandate. Convinced?
I am, you see, because I'm glad that we've been able to clear the confusion between the development bank and the commercial banks. The commercial banks are under a law, Act 930. Development bank is also under a law, 1032. And the two laws are different. They have set out what their mandates are under 930 for commercial bank, and 1032 what their mandate is under for the development bank. You see, but I keep saying that the only confusion appears to have been the use of the word bank. Because if you go through the 66 countries in the world that has development banks, more than 50% of them are not using the word bank in their name. This same confusion came when we set up Exim Bank. MP said, if it's a bank, then Bank of Ghana should regulate them. Then they said, that's what they call them in all countries. So this is a development institution. And I think it's most appropriate if you use that word than a bank, because it's anything but a bank. It's not a bank by the definition in section 156 of Act 930, which says it's a deposit-taking institution. And this is not a deposit-taking institution.
So, Charles, that was the thought of Nanoto Champon. He's a banking consultant explaining about his thought about the rate cuts and what that would mean for you, Charles, if you have any plans to take any loans and going forward. But, Charles, another quick update is on the recovery of assets by the receiver of the banks, that is the commercial banks, and those that was liquidated. And the governor talked about the fact that they have been able to actually collect about 1.7 billion Ghana cedis out of the total projected amount of little over 10 billion Ghana cedis. So, Charles, these are the issues that have happened at the MPC here. Still waiting for you if you have any question as well to be updated on, please.
Exactly. Just before we let you go, George, in just a few minutes, what has the governor been saying regarding the country's debt stock? What has been his reaction to concerns hovering around the debt stock, George?
Well, he thinks that, yes, of course, they've gotten to levels that are worrying, but he thinks that there are some practical measures or some tough measures being taken by government to correct the situation. And if the recovery that we are seeing indeed happens, then we should be able to build more assets and also settle these debts that could bring the situation under control before the close of this year. So he doesn't think that things might get out of hand where we could even be classified as a high risk of or debt distressed country.
Exactly.
And he's quite convinced by some measures that government is taking to try and control the situation. Charles.
George, many thanks for that extensive coverage from the MPC meeting, where we've learned that the MPC, the monetary policy rate, has been reduced by 100 basis points to 13.5%. But we did also hear from the Bankers Association, a consultant in that regard, Nanoto Champon, stating that even though the rate has been reduced, banks can be compelled to reprice the rates they lend to businesses, attributing that to high non-performing loans. You're still watching the marketplace. We shall keep an eye on this one for our subsequent bulletins. But in the meantime, we'll go for a short break. When we return, we have a story on the high-level meeting between the Minister of Trade and Industry as well as Nigerian counterparts over Ghana-Nigeria protracted retail feud. Do stay.